Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Thursday, the 2nd of February. I'm Daniel Lam, your host for the podcast. The Fed raised rates by 25 bips as per expectations. While Powell did signal that there could be a couple more rate hikes ahead, and it is too early to declare victory against inflation, overall, the tone has turned dovish. For example, the characterization that inflation remains elevated in the December release was replaced with inflation has eased somewhat, but remains elevated. And references to supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures were excluded from the February statement. So S&P 500 index broke above key resistance level at 4,100 overnight. Now, the fourth quarter earnings season has also been beating, low expectations. I've also noticed that many of the US growth stocks have stabilized, and in some cases, they are at an early start of an uptrend. Now, we call the podcast this Tuesday and link this up with Hong Kong China equities, where I mentioned how hard and fast they have been running up and how they are susceptible for short-term consolidation as fund flows may rotate back into US equities in the short term if we do get a dovish FOMC decision, as we did overnight. Hence, it is likely that S&P 500 has a bit more room to run on the upside for the short term. And it may possibly reach key resistance levels at 43.25 and 45.12. You may consider waiting for these levels to be reached, or doing that in stages, and rotate back from S&P 500 into the Hang Seng Index, especially when the Hang Seng Index may reach levels to add that we've been highlighting, i.e. 20,300 and 19,300. Now, echoing all these, the US 10-year yield fell overnight, and it is very close to key support level at 3.25. Rotating into bonds right at this moment may not be so attractive. It may be better to wait for S&P 500 to go higher, such as the aforementioned levels, to rotate back into fixed income. Good levels for the US 10-year yield would be somewhere between 3.65 to 3.8 for those who want to rotate, for those who want to add. In terms of FX, the US dollar is likely to weaken further. So looking at the charts, the euro is quickly approaching a key resistance at 1.1184, breaking which may lead to the 1.15 level. And for the dollar yen, it is trending towards our 12-month target at 127. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.